balance sheets, and income statements, they all start with one thing, the general ledger. Want to learn what the general ledger is and how accountants use it? Stick around and learn about it. The general ledger is a sophisticated system of accounts that allows the accountant to quickly see all of the activity for any account in one place. Want to see all of the bank activity that was recorded? There is a general ledger account for each of the business bank accounts. Want to see all of the activity for office supplies? There is an account for that. How does the accountant use the general ledger? First, the accountant analyzes the business transaction with the help of the accounting equation or T-account. Then, in step 2, the accountant records the transaction in the general journal. Then, in step 3, the accountant transfers the general journal entry to the general ledger with a process called posting. During the posting process, each line from the general journal is transferred to the accounts that are listed in the general journal. Let's practice this concept with the help of an example. On January 2nd, Company A purchased equipment for $2,000 with a credit. When we analyzed this transaction, we determined that we need to debit equipment and credit cash for $2,000. Then, we journalized that transaction in the general journal. Now, we are ready to post the general journal. The posting process is automated in most companies which use accounting software. What you are learning here is the manual process so that you know what the accounting software is supposed to be doing. We find the two general ledger accounts we need to post to, equipment and cash. Next, we start with the equipment account and write the date of January 2nd into the date columns. Then, we write the journal ID into the description column. In many accounting systems, the accountant can click on the journal ID and pull up the entire general journal if they want to review it again and see the supporting documentation. Next, we enter the amount of $2,000 into the debit column and calculate the new balance. In this case it is $2,000. We now completed the first part of the posting process and can move on to the second account, cash. The cash account has a $8,000 beginning balance. We write the date of January 2nd into the date column. Then, the journal ID into the description column. Next, we enter the amount of $2,000 into the credit column and calculate the new balance. It is $6,000. The final step is a note on the general journal that shows that the general journal has been posted. And that completes the posting process.